How's everybody doing? I hope everybody had a terrific weekend, had a terrific end of the month. We're going to be rolling into the beginning of April here, the beginning of quarter two. Puts happiness into my heart, right? It also beginning of the month. We got NFP at the end of Friday, our beginning of Friday, end of week, right? Rolling into CPI, PPI weeks after, FOMC week 3, but I love the volatility of NFP, CPI, blah blah blah, whatever. Let's quit yapping and go ahead and get into the one size fits all ICT trading model. The reason I say this is one size fits all is because if you know ICT concepts, you understand the concepts, right? Most of the time for a high probability setup, you're going to be looking for a sweep of a high low, right? So why not just get in at the high and low? All right. You don't have to wait for inversion. You don't have to wait for a breaker, then a retrace, right? Just get in at the high or low. All right. Everybody, I mean, if you trade a chart, that's where you like. I mean, if you don't want to get in at a high or low, I don't know where you want to get in at, right? And even with confirmation at the high or low, it's what we're going to be going over today. It's the, I mean, if that's not what you want to do, I can't convince you. I really can't, right? So with the Model 1, the CISD, change in state of delivery, right? It's going to be after a false breakout, right? For the model, we're going to be searching for stop rates with the idea of mind of buying below old lows and selling above old highs. For a false breakout, of course, it needs to look like a real one, so that the people, the breakout artists, they hold profits for a good long time to get a good RR, right? If they couldn't, or I mean, if they didn't, buying above each high and selling below each low, they're not going to have a super high win rate, but they have to hold for a high RR. So we're going to have to see displacement into our key areas that leave fair value gaps and show displacement, right? And fake even ICT traders out, right? Because they think it's a market structure shift, right? You can later use these FVGs as IFVGs and predict it even before the kids looking for the IFVGs expect it. Okay, after a false breakout, we look for a CISD in the opposite direction to then look for a retracement into the order block. All right, with a CISD, we'll create the order block, right? Because we'll be liquidating an old swing low, going through the swing high, right, and closing above. And sometimes we don't have to close above, right? But eventually, we're going to close above because we're reversing. So why the order block, you ask? From my understanding, after all the orders get paired and stops get ran, the key orders get filled, or excuse me, the orders get filled into that key area and create the order block, right? Not just any order block, it's the key order block. You have all those orders that have been paired, right, from getting their stops ran, right? So then they go into the buy orders, right, to then form the reversal. So orders are not going to get past that order block, right? So why is the order block a safe entry? Other than getting inside of the high time frame key level, which can be very scary for new turtle soup traders, this will allow you to have the highest RR possible while also waiting for a nice reaction in case your high time frame key level you have marked is not precise, right? We could also have a high time frame SNT and just might mess up your technical analysis a little bit, right? With a stop below the order block, you allow yourself small retracements if the market is needed to have those, right? And be able to let runners run past old highs or hold lows. And this means if you do get stopped out with good risk management, you should be able to lose at least 3 to 5 trades and simply have one trade that will make up all the profit from those 3 to 5 losses. And you don't want to trade in mind of making those winners back, but you want to trade in mind of each trade being independent and its own trade, right? And from my understanding, there's a time to use the body of the order block, and there's a time to use the wick of the order block, right? After we create a CISD, if we leave a fair value gap and it's not a breakaway gap and we want to come retrace into the fair value gap, do we use the wick of the order block, right, that is under the fair value gap, or do we use the body of the order block? Keeping in mind that not all fair value gaps will need to retrace all the way back to the order block. We could use a previous breaker or previous mitigation wick, right? But for this, you'll need a bit of chart time, right? And just, seeing it over and over and over again. But if the fair value gap left from the order block is filled, right? If we've already retraced and react from that fair value gap and then left a sell side level for us to sweep as an internal sell side level, right? To sweep internal, then go back to external bullishly, we've been taught to use the order block body if the fair value gap's already filled, right? If we've used it as a breakaway gap and then are now returning to it after sweeping a buy side level, you can more oftentimes not use the wick of the order block. As we can see here in our first example, we sweep the sell side, raid stops, create a low time frame CISD, right? React off the order block, create another CISD, and then react off the order block again. Correct? So then after that, after creating two CISDs, and then you can see this one as a breaker, right? It's not that specific to me what you call it. We react up, react bearishly, range, sweep range low, range high, come sweep the range low again, react to the order block, and you see how the fair value gap has been reacted to. That is when I like to use the body. In our next example, you see here, we have our CISD. It leaves a fair value gap unfilled, right? We accumulate, sweep range low, use the wick, take out the easy low resistance liquidity. Okay? So if you put this in a 15-minute time frame, right? This could be, your stop raid into a high time frame, 15-minute fair value gap, right? Saying this is a 1-minute chart, excuse me. You could come into your 15-minute fair value gap, right, with time aligning. You react 1-minute CISD, leave a breakaway, right? Take out this sell side, then retrace into the wick of the order block breaker, right? And then you can long, right? And see also with our model 1, our real entry would be down here, right? And sometimes it's scary getting in like this, right? But after you sweep this low, green candle, equal highs, come right into the VI order block. See how it's unfilled, and we use the wick, and then come down into the body of the next candle. Okay. Okay, and then also seeing it sometimes, written out in a marker form has helped me. So we have our original accumulation, right? Sweep lows, internal, external, right? React off of order block breaker into our key level, right? After we react from our key level, we then leave an order block with a low time frame CISD, right? We come back into the order block, we sell, stop below, stop above the high, stop above the high, sell some here, stop break even if you want to, react off the breaker, and then continue to finish the sell model, right? You can even use the model if we, leave the gap unfilled. Original accumulation, second leg accumulation, smart money reversal, turtle soup into a key area. We have our reaction. You weren't able to get an entry. You can enter off the 5-minute CISD, right? Which can also be a breaker. And then still stop above the high, right? Our stop at the order block, EQ, right? And just risk a little bit less. Okay. And if the market structure is showing you right, that we're reacting quickly from our high time frame key level, right? It's a less risky sell, right? Because you have a small time frame accumulation up here, then a second leg, right? But with where you want to keep your stop, you just need to risk a little bit less just in case somehow your stop gets ran, right? Because sometimes we might need to retrace, right? Sweep, and then go lower. And then if you want to, you can always watch and add in there as well, right? Just add in your con that you didn't add in there. And then you have a happy medium for having fear of missing out, right? Because some people can't just handle themselves, right? That's how to risk, or that's how to manage fear, right? Just risk less, right? If you're confident in it, but you want to get in the trade, right? But you have to have your stop higher, just risk a little bit less, okay? And obviously with markers, you can't see, all the perfect market structure, but still a low risk sell, right? In bullish market structure, have your accumulation, second leg accumulation, smart money reversal, right? And even here, right, you have a low time frame CISD. If we pull this out to here, right, we have our big swing low, right? Create small time frame accumulation, react to this low time frame CISD, right? And then continue higher, where you then see here with your low time frame CISD, right? It's all fractal, so low time frame here can be lower time frame here, right? With stop below the low. And then we come into where if your high time frame key level's off, right, and or we don't aggressively come in to our area, right, and leave a fair value gap and displacement, right, then you can wait, right, risk less, right, and or if you do take a loss, right, 3 to 5 trades will make that back. Okay, let's get into some trades and then the back testing results. I sat for about, I don't know, maybe an hour or two just taking only Model 1 turtle soup trades, and I don't know, about 23 to 25 trades. We'll see the results from them, right? Keeping all the checklist and everything in mind with what we want to be high probability. This is what trades I have taken during the back testing session, right? And also show, an A plus Model 1 setup, right? Model are, structures like this aren't the perfect Model 1 setup, but we can also see how we, soup the 4-hour range that we're in, right? Close within, close within, close within, right? Close within, right? Close within, sweep the highs, right? Run lower, Tuesday, low of week, Wednesday, Thursday, Friday, right? And then at Friday, ES has the high of week, right? And we don't break the Monday high week and react off the order block. If you see the 1 hour, I think it was the 2 hour that makes it. Yeah, right into the order block. So you have your CISD, right? Retrace to the order block. Still valid. Correct? And then with the lower time frame trades, right, we can zoom into this 1 hour range here that we create overnight. Or not overnight, but from the previous day, right? 3 to 4, we react from this breaker lower, right? If we see our market structure, obvious market maker sell model. So we should take out this low, which we've done, right? Then reacted bullishly. We've now come down, create equal lows. So, kind of a dumbass question, but what do you see? Ask yourself, honestly, what do you like to see happen, right? And it's marked already, right? But you would like to see a retrace into the 4-hour mitigation / order block, sweep the lows with displacement, and then be able to long. Okay. So coming into our 10 a.m. open, right? Or did I say 10 a.m. open? Tripping. But coming into our 9 a.m. open, or 9:30, good lord, excuse me, right? We create a wick down, come up, create equal highs, low resistance, right? Above into a fair value gap. Okay? So we wick up, or we expand upwards, right? This would be what we see as our order block, right? We're low time frame bearish. High time frame bearish, right? Looking for a Wednesday low of week into our high time frame key level. Okay? And right, we've already reacted from the fair value gap itself, so we want to see the body. We have our soup, right? CISD didn't have, well, we won't quite call it one yet, right? Because we didn't, right? Didn't take out either high or low. We now take out the candle low, or create relative equal lows, take out the low, right? And come back into our order block, right? CN CISD, then another low time frame CISD. We can get in here, stop above the high, coming into our Q3, right? After what seems to be an accumulation, manipulation, distribution, double manipulation, right? To continue to the sell side. And right, we show our higher time frame structure, showing that we have a long wick, right? Not a rejection block, long wick. And also equal lows where we swept into the sell side, but not aggressively, right? So we want to see us displace lower, right? Oh man, I hope it doesn't. Well, going to the 1 minute, it resets it, right? That's so unfortunate. But we have our CISD, right? Lower. Doesn't break our stop. That's so unfortunate. I'm going to get this off the screen, right? Doesn't break the stop. Doesn't break the stop. And then we break lower into our order block, right? And then so let's see what time this is at, right? It's at the end of the day. But you see, come into our key level, displace upwards, right? And see even the break above this high, and then stop below the low. And then you see we go to take out the high resistance. I missed the candle there, of course. But you see we come in. The fair value gap has not been filled. So we come into the wick of our order block. I want to get it precise on there. And how much more precise can you be right there, right? You see, and I'm not expanding it to be higher than it is, no lower than it is, right? And I said we could enter here just off the 5 minute CISD, right? Then you get into a higher time frame CISD after breaking these highs and even these highs, right? But then we had a news event or something. What is this? This had to be this was Nvidia earnings, actually. Yeah, that had to have been. If that's, I don't know what that is if that's not Nvidia earnings. right? But coming into our Q2 manipulation after accumulation, right? Into a distribution, okay? Right into our order block, right? And that's our A plus model, or excuse me, our model one back to back right there, right? We're high time frame bearish with the low time frame retracement, right? To soup the open, right? For a accumulation, distribution, double manipulation into an accumulation, distribution, right? And so you accumulate and come sweep the highs, right? Don't sweep these, maybe SMT, and then continue lower to where our high time frame key level was, right? Low time frame CISD marked out. Get in there, stop below the low. TP at the low resistance high, and then you keep in mind that we're high time frame bullish, right? So we're going to be looking for a low time frame retrace to get back in. Say if we're already out after getting in here, we retrace wick into the order block, right? And then continue to take out this high, right? And probably you can see how clean these accumulation ranges are, right? And continue to go take out those highs. All right. Keeping in mind how I showed not every high and low is a good opportunity to buy and sell. We just have to use it in coordination with order flow, DOL, which is draw on liquidity, what time it is, right? If we have any market maker models, and always, of course, a high time frame key level. We showed there at the beginning, or not the beginning, but the first scalp lower, right? I was saying we're high or low time frame bearish to then quickly retrace to our 4-hour order block. We got in short after we swept the open highs, right? I messed up what the time frame we were on, so then it showed our future, right? But we would have got in or got out at the lows, waited for a reaction, our CISD off the high time frame key level, reacted, and then would have taken the highs, right? And then we also showed the A plus model on an even higher time frame, right? How we took the highs, wicked back down quickly with the news or the earnings or whatnot, right? And then continued to take the highs. You saw it back to back to back, right? On lower time frame and a higher time frame. Okay, so after at least 23 trades of this was the results of taking trades that I decently felt comfortable with, right? It was day to day, New York pre-market to roughly 10 a.m., right? If I was in a good enough position to hold through the 4-hour candle, open, low, high, close, right? If we were trying to go higher, I would still be able to, hold a runner, right? But most of the time with back testing and just getting out, and how the candles are, I'm just gonna get out and not really hold a runner, right? And just keep in mind where the draw on liquidity is and what the candles are doing, okay? And with best trade being 2,000, I wasn't risking a whole bunch, right? 2 minis, maybe 3, right? Maybe one in, enter one at the second CISD, then close, right? But with most of them being scalps, right, just took a lot more trades, 85% win rate. Something, get it better, something just light, not too bad, right? And I wish it showed an RR. Don't have an exact RR on those, but it's at least 1 to 3. I don't know if you can do the math on that with just the best trade and profit and cash, right? But with a 85% win rate, it has to be, right? But I hope everybody was able to understand this. If you have any questions, you can always let me know. As always, you can always look on Twitter, try and find some more information. Always join the Discord if you want to ask questions in there, right? Romeo on Twitter, this is where that model comes from, right? It's his idea. And, the idea of the turtle soup is not his, right? A lot of these people's are, a lot of people like ICT and Romeo are just, modernizers and show how it looks on the charts we look at now, and even just put it together just so we can understand it. We would be lost without those people. So it's great that we have them, and it's all put in front of us to where we can learn, right? and even to where I can put it in front of you and try and spread it and show as much people as I can, or show as many people as I can. All right, I hope everybody enjoyed this video. Right, leave comments, like the video if you did. Sadly, I wasn't able to get my mic. It's still coming in the mail, but I forgot this week was Easter Sunday, right? And it was set for delivery today. But it's not gonna be coming. It'll be Monday or Tuesday, right? But I hope y'all enjoyed, and I'll see y'all in the next one.